Welcome to the third module of the Business Management Capstone course. Since you already know the structure of Blackboard, we're going to just jump right into the module. Of course, first we have the learning objectives for the week, the assignment summary, which I'll cover here in a moment, the Module 3 course content. Make sure you're reviewing this information. We're now introducing the textbook to you this week. Review the Chapter 1 PowerPoint presentation. I have key financial ratios for you to review. Information about the smart book that you'll be utilizing throughout the course for the e-text. The global simulation information, again, continue reviewing that as well. Next, we have the Chapter 1 Smart Book. Now, this is very similar to Learn Smart, just a little bit more advanced. So if you're used to using Learn Smart in the past, exact same concept, read the chapter, answer questions, so on and so forth. Next, we have the course participation, which is a discussion board. You will be focused on competitive advantage. You will be choosing one of the companies from step 1. And in step 2, you'll be analyzing that company for what is their competitive advantage. In step 3, you will be responding to at least 2 other posts that your fellow classmates have entered. Keep in mind, if you don't respond to 2, you will be deducted points. Next, we have the Chapter 1 quiz, which will be 25 questions, multiple choice. You'll have 40 minutes to complete it, and you will also have 2 attempts at the quiz. Lastly, we have the practice round year 7 within Globus. Clearly, you should be familiar with Globus by now. You should know what's going on. You also should realize what you should be doing this year for the year 7 practice round. Now let's take a look at Globus and see what happened in year 6. Okay, as you can see, Team E jumped out early with a weighted average score of 105. Team C came in at 102, so great job with getting above 100. That's very difficult within the practice round, so tremendous effort on those 2 teams. Now, with that said, Team D, they're at 94. That's nothing to sneeze at either. You got Team F at 87, Team G at 80, Team H at 78, Team B at 77. And if you ask me certain questions during the course orientation that we had, the sessions that we all connected via Zoom, I told you, as long as you're like middle of the pack, that's fine. You should be no worries. You only had 1 year. So what I would say is, 7 or above, great. 8 is kind of like that borderline, like, that's okay. It's not too bad at 64 with company JMM. But now my concern is company I and definitely company A. I've never seen a score of 29 for the year 6 scoreboard results for the practice round. Now, fortunately, it is only practice round, so I won't be too harsh on you, but I'm just letting you know, definitely team I and A, you have to step up your game, or the other 8 teams will bury you once we start the true simulation here in a couple weeks. So now I'll actually go over some additional information that I won't in the future. I just want to make sure you're looking at this to help guide yourself through your decisions. So if you look on the left-hand side, you have page 1 is the scoreboard. The next one I have is the earnings per share, return on equity, and stock price. So if I look at earnings per share, I notice team C, D, E, and F are all bolded. That means they met expectations for the investor. The highlighted one, which is team E, was the best in industry, right? At 203, clearly the highest in earnings per share. Next, we have return on equity. Then again, companies C, D, E, and F met expectations. So great job. You don't have to be the best in industry. You just at least want to either meet expectations or be very close to expectations. So then again, team E was best in industry for return on equity. Next, we have stock price. You have team C, D, E, and F, all the same teams that met expectations. Then again, team E, sound like a broken record, they were best in industry. Okay, so they're doing fantastic. So if I was you, if you're not team E, I would absolutely be analyzing what they're up to unless you feel like you have a different strategy than they're planning on using in the future. Next, we have credit rating and image rating. So here, credit rating, what I tell everyone is if you have a B plus or above, you're normally good. And then again, this is practice round, so, company B, C, D, E, F, G, H, and J all met expectations. Company A and I, which is no shock, did not, with a C minus a C plus. You definitely don't want that. You don't want to be in the C's at all, and you really don't want anything below a B minus. Anything above B minus or what, A minus, A plus, you're fine. Next, we have the image rating. We have company A, B, D, E, F, and J that met expectations. Now we can see with image rating, company D actually has the best in industry. So company E is doing fantastic, but they don't have the best image rating. So that's where you have to decide as a company, like, do I need to be the best, or do I have to meet expectations, or can I just get close to expectations and maximize my profits? That's the fun part about the simulation. To me, this is where it gets exciting in the course. The first 2 weeks, it's a lot of talking, just getting to know each other and getting to know Globus. Now it's action time. So these are where you would have to really make your decisions. So now I'm going to go ahead and jump into the competitive intelligence report, and I'm not going to go over all of them. I'll touch on the first one, the competitive efforts by company. Okay, and I'll stick to North region. Obviously, we have more, but I'll just do one screen because if you listen to one, I'm sure you can figure out the rest of them. So I'm quickly glancing at this, and if I was you, I'm trying to get data, and so I'm looking. I said, okay, the average is 247. Okay, so I have company C at 280, and let's see, company F at 300, company I is at 224, and let's see where some of these companies might be going wrong. So it was company A and I believe I that were the worst ones. So A has a drone they're selling for $225, PQ rating at 4.6. Okay, so that's reasonable. So it seems like they're pretty solid with the North America aspect of it. The market share, they have 11.7%. So they're fine because they're pretty comparable to B, but they have a little bit larger market share. So I would say they're fine there. But now if you look at D, under gains and loss, which clearly highlighted, a 7.6 loss. So they may need to reevaluate their decisions that they chose for drones. So then we can jump over to I, and I has 8.7 in North America market share, so they're not too bad. They have a price at 224 and a image rating of 3. So what I do is okay, let me find somebody else with a similar image rating, and the closest one would be H, even though H is a little bit higher, and they're selling for 225. So if you notice, of course, H has a higher market share than I, because they're only $1 more, but they're 0.7 PQ rating higher. So that's where you want to really start analyzing the data. So now if I jump down to the drone market for North America, so if I look across the board, the average is 1,145. So let me see if there's anybody that kind of stands out. Okay, so I'm looking at Team A. They're selling for 1,000. Their PQ rating is 4.4. That's not bad because if you notice, Team C is at 4.4, but they're selling for $1,300. Now, they don't have all the exact same features when it comes to number of models and everything, but they're somewhat close. So let's see market share. Team A has 12.2, and Team C has 7.7, which makes sense to me, being the fact that they're charging $300 more than Team A. So then again, this is kind of information you want to start digging through. Now, I don't want to keep on pointing out too much. I don't want to give away anyone's strategy. So, but it's basically to make sure you're going through these reports because there are so much valuable information. And you may say, well, why is Team A doing so bad if it looked like in North America they're doing good? Well, if you dig around, I'm sure you're going to figure out why. But that's not my place to tell you. All right, that concludes the video for Module 3. As always, let me know if you have any questions. Have a great semester.